Happy New Year. It is officially 2026. Can't believe that 2025 went by that quickly. So that means today we're going to take a look at my dividend portfolio, how it performed in December of 2025 and the full year of 2025. Take a look at all the buys and sells we made in the month and the year, and the dividends we received, and just how the portfolio is trending and growing over time, and where I hope to take the portfolio in this coming year of 2026. As always, everything I'm showing, all the spreadsheets, will be my personal spreadsheets that I've built and are currently in beta testing for anyone that wants to try it out. I'll leave a link in the description to the video and the spreadsheet if you want to take a look at that. And I'm hoping over the next month or two to launch that as a product with a small monthly subscription fee. If you are interested in that, let me know as well, and I'll work to get that rolled out as soon as possible. All right, so taking a look at my spreadsheet before we make any updates for the month of December, we can see we got one dividend raise this month, which was for Carrier Global, almost 7% there. So a decent raise, definitely below Carrier Global's 5-year dividend CAGR average, but we'll take it nonetheless, and it will definitely increase our dividends for sure. And we can look at the portfolio kind of summary data, just under $17,000 in equity, and annual dividend income projected at $402.84. Obviously that doesn't include any interest on our cash, but that's just purely dividends from the portfolio. So now let's just go over to Fidelity so we can import my transactions. I have them filtered out from the 1st to the 31st of December, and we can download those as a CSV file if it wants to download, and save that to our computer, and then go back into the spreadsheet and import that CSV. And then once that's imported, we'll be able to run a script that I've created. And now that's imported and we can see all the transactions, and I have these scripts here to insert the transactions. So we'll go ahead and run that script, and this will just give us this pop-up, make sure we have everything set up properly, which I believe we do. So we'll go in and insert the transactions into our spreadsheet, and this is going to parse through all the transactions and figure out what type of transaction it is and figure out where it should put it in the spreadsheet, and then it'll put it in the appropriate places and do some calculations on those transactions as well. So the script has finished running, and we can see all the transactions here for the month of December. I'll go to another sheet where we can see kind of a consolidated view in more detail, and then here's all the dividend payments for December: $9 from Pfizer, $2 from Aflac, $3 from Southern Company, almost $12 from Johnson & Johnson, $2 from Microsoft, $2 from 3M, almost $3 from Coca-Cola, just under $1 from Amcor, $3 from Lockheed Martin, $1.20 from Travelers, and almost $4 in interest on our cash. So if we look at monthly dividends, the total for this month is $42.77, which looks to be the highest total we've had so far. So trending upward. The upward trend is a little bit more slow the past year and a half, I would say, just because we haven't been adding as much to the portfolio and haven't been investing as much on a regular basis. Total dividends for this quarter, $112.94, which is actually only a tiny bit above Q3, which is a little bit disappointing, but we're still making progress, even if it's just pennies at a time, so I'll take it. And on the year, total dividends of $426.37. So we did eclipse the $400 mark and surpass 2024's value by, let's see, what is that, about $65 or so. So like I said, the progress is slowing down, but as I've talked about in previous videos, I'm kind of deprioritizing this portfolio at this point, at least in the short term, as I focus on some other things. And so, you know, this portfolio isn't, like I've said, a super big focus in terms of investments right now, but I think in the future I will prioritize it a little bit more, but it still isn't going to be my main portfolio. My main portfolio is still just going to be mostly index funds, pretty simple strategy there. So this is actually the sheet I want to look at. So if we go from December 1st through the 31st of December. And then if we filter by total amount invested, yes, I want to edit, then we can see basically a consolidated view. So we invested the most in air products and chemicals, almost $75 at just under $240 per share, which I think is a pretty good cost. Same thing, HP, under $23 a share, $55 invested there. Procter & Gamble, almost to $140 per share. Carrier Global, $52 per share. And then all the rest of these are pretty much just dividend reinvestments here. In terms of actual purchases, only $194 in actual purchases from the original cash in my portfolio. So not a ton of purchases, but that's okay. We can go back and probably look at the summary sheet here. And the portfolio value still just under $17,000 because didn't add any cash to the portfolio. Dividend income up by about $8 or $9 to $411 per year projected, and that is just over $34 a month. Dividend CAGR just under 5.5%. I do want to increase that. Purchasing companies like Carrier Global and HP are certainly going to help me get there, and Air Products and Chemicals. Those are all companies that have dividend CAGRs above that 5.5% mark, I'm pretty sure, and I'm confident are going to keep raising the dividend at or above 5.5%. So those are the kinds of purchases I want to make, and I'm happy to make for sure. This is what the portfolio is looking like. If you want to pause anywhere, this is the allocations, equity by sector, and dividend income by sector. And this is one of my favorite news sheets to look at, upcoming dividends and these dividend projections. So these are all the dividends here for my portfolio that have been declared. So I can see the dividend amount that's been declared, the number of shares I owned as of the ex-dividend date, and then the projected payment for that company. And like this HPQ dividend has already paid in the first few days of January. And then the rest of these I'll be looking forward to in January. So I'm looking at only 3 other dividends in January from Leggett & Platt, Cisco, and JP Morgan. So going to be a fairly light month, you could say, but that's certainly all right. The total projected for January is $26.48. We can see here in this chart. And then these dividends below are basically just projected. I'm just guessing essentially what the pay dates and ex-dividend dates and dividend amounts will be based on the prior dividend that was declared. So the rest of these are just projecting and guessing out for the rest of the year so that we can get this full chart here that projects our yearly dividends of $410. So this is slightly different than the projection on my summary sheet, but it's within $1 of each other. So I would say that's pretty accurate. And we can see the first month of the quarter is consistently the lowest, and then the last month of the quarter will be consistently the highest in terms of dividends received. And then taking a look at these charts here as well, before we move over to Fidelity again, just some other charts I like to look at. Value over time, obviously haven't been adding much to the portfolio, so that has stalled out a little bit. 5-year dividend CAGR still up above 5%, but would definitely like to be up here where I was back in 2023, beginning of 2024. That is really where I'd like to be longer term, and so I need to work to get that up there. There's certainly a few companies in the portfolio that are kind of really dragging that average down, so that doesn't help. But we can see this dividend income consistently chugging up over time. Payout ratio pretty solid, just below 60% right now on average, weighted across the portfolio, and dividend yield below 2.5% now. But that's certainly okay. The market just keeps going up, and I'm a long-term investor, more focused. I would like to be more focused on dividend growth, so the yield is not as important to me in the short term. I'm not going to be using these dividends anytime soon, so the actual yield isn't that big of a deal, but it's interesting to see the progress, and generally over the past 2 years it's gone down a little bit. So now let's move over to Fidelity, and we can look at performance data for the portfolio. So over the past year, the portfolio has massively underperformed. Actually, the past 3 years, essentially, the portfolio has really underperformed the market. And I think that's largely due to, well, first we can see 11.6% for my portfolio versus 23% for the overall market, the S&P 500, and 22% for the Dow. So pretty much the same there. But I think that's due to two main factors. Well, lots of factors really, but first of all, my portfolio is generally less volatile, has a lower beta than the market. We can actually go back. I think I have a beta metric. And yeah, the average weighted beta of my portfolio is 0.83. So that's basically saying if the market moves up by $1, on average, my portfolio is only going to move up by 83 cents, at least like on a per share basis, obviously. So when the market goes up, my portfolio is going to go up a little bit less. When the market goes down, my portfolio is going to go down a little bit less. So that's part of the reason. Another part of the reason is I've been in cash or have not fully invested in the market in equities. So that's going to obviously slow down my progress when the market's going up and make my portfolio look better when the market's going down. And the market's been going up the past 2 or 3 years, so that makes sense. And then also I've had a few companies, mainly just one, Leggett & Platt, that's kind of tanked a little bit and just obliterated some value. Luckily, I didn't have a ton invested in Leggett & Platt before it tanked, but now I certainly have even less for sure. And that's probably one I'm going to get rid of eventually. But we can see over the past 5 years, the portfolio is a lot closer to the market. It's at 13% for the Dow and 14.5% for the S&P 500, and my portfolio is at about 12.5%. And I think the reasons for that is that, in 2022, I think is when we had that downturn. So my portfolio probably outperformed the market during that time period and caught up on some of the performance versus the market then. And then also, back in the 2021, 2022 timeframe, I don't think I had nearly as much cash in the portfolio that was sort of not invested in equities and not growing. So I try not to worry about this performance too much. At this point, this portfolio isn't a huge portion of my investments, and I really don't foresee it being a huge portion of my investments in the long term. I actually see it decreasing in terms of the amount of my overall investments in the long term as I just throw most of my investments into S&P 500 and total market index funds, stuff like that. So this portfolio is something I can work on and chip away at and try to learn and improve on. And so I think so far it's done a good job of that. I've certainly learned a lot, and it was, I guess, kind of the basis for building this spreadsheet, which I think is a pretty cool product. So if you do want to check that out, I'll have a link in the description, like I said, and I'll be hopefully releasing a full, I guess you'd call it, official release version in maybe a few weeks or a month or two. So look forward to that if you are interested. Let me know if you do have any questions or suggestions. I really appreciate you sticking around to the end of the video, and I'll see you all in the next one.